Hello, everyone. Happy Monday morning. Happy FOMC week. Happy quad witching week. At the end of the week, this is going to be some volatility, and then it's going to get interesting, especially after quad witching. How's everyone doing? Remember to roll your futures if you haven't already. John, good morning. Patrick, good morning. Sterling, good morning. Martinez. Good morning, Ted. Yep, another assassination attempt on Trump. Uh, it's like the media is just, it's like they're reporting traffic was backed up due to a minor car crash on the highway this afternoon. And by the way, there was another assassination attempt on the president, or the former president. It's like, all right, yeah, and he needs to tone down his rhetoric, but they don't tone down theirs. May you live in interesting times, and it's going to get more interesting, more and more interesting. Good morning, and more volatility. Remember, volatility generally expands bigly right at the top or the potential top of markets, as we don't have a confirmation that the top's in yet. Again, pretty strong week last week. So that's where we sit. Hello, Charles. Again, thank you everyone for tuning in. Did I say good morning, Royal Palms? Boy, it's still Monday. Um, Strange number out this morning. Empire State Manufacturing Index expect to be negative, but this wasn't a minor bump. This was above every estimate. We keep getting these really weird data prints too. And I'm talking up, down. I'm talking all over the place. It's like nothing's consistent anymore. Good morning, Anissa. Oh, by the way, uh, I'll be on Ninja Trader this morning too at 10:30 Eastern, and in case anybody wants to tune in. I love how tariffs are bad. By the way, we're going to put tariffs on that. Good morning, Jacob. The question is, do you also hate Taylor Swift? I have, you know what? See, that's where he doesn't help himself. I don't think with his post, I hate Taylor Swift. Fine, she endorsed Harris, whatever. Just you know what? He doesn't help himself with comments like that. He does not. It's like he's a teenage boy. She she endorsed Kamala. He doesn't help. Focus on your stuff. Don't worry about that. Focus on that and not getting shot. Okay? You'll be there. Well, thank you. Thank you, Anissa. So, what else we have going on this week? We have retail sales tomorrow. Important number. We have a big thing is Wednesday with the FOMC meeting and the press conference. Then we have unemployment, jobless claims on Thursday. Some Philly Fed numbers, home sales. And then Friday is, you don't have much going on. You have Harker speaking in the afternoon, but you have quad witching OpEx, which is actually going to free up a lot of option gamma and everything else. So I'm expecting next week to get very interesting. Remember, we are still in September. Doesn't necessarily have to be a down month, but this is when, after September OpEx through October OpEx, is when I really am careful from my perspective. He did the same thing. Joe Rogan. I wonder if Rogan will get booed at the next UFC. We'll see. We will see. By the way, Apple, the pre-orders based off analyst reports were down from last year's iPhone 15 and especially get hit in the iPhone 16 Pro. So Apple down nearly 2.5%. NVIDIA also done all the chip makers unless you're looking at Intel, which is up with a government contract of like 3.5 billion. So oil's also up. We'll just get to that groups before I get too far ahead of myself. You can see technology is lagging bigly, and everything else is positive, with energy leading the way up. Overall, it's sort of a risk off type of day, to use that term, which I hate. This is fascinating. So remember last week flipped back. Well, it was 50-50, then it flipped back to favoring just a 25 basis cut. Well, over the weekend, it's now like has everything falling off the cliff. So you have the 65% odds of a 50% basis cut Wednesday, followed by a single cut on in November, followed by a double cut in December. But look, by next May, it has it already back down to 3 to 3.25. This is like the economy just fell off a cliff. That's the kind of rate cuts. You have 2 double cuts in there, 3 double cuts in there. You know, so if that's happening, also like what I took from the iPhone 16 Pro orders were the weakest. Again, the consumer is tapping out. Do I need to upgrade my phone to the iPhone 16 Pro? No. If I need to upgrade, maybe I'll just go to the standard iPhone 16. Maybe my phone will last me a little longer. You know, the AI revolution on the iPhone, and you have a new camera button. So, fear and greed, solidly back to neutral. Schiller PE, 36.21. I mean, this is not a cheap market, and it's so something's got to give. Either a market at some point, do we have a topping pattern that's triggered? No. However, price beyond perfection with the Treasury market saying the Fed's got to do like massive rate cutting because things are falling off a cliff. Well, if things are falling off the cliff and you have a 36.21 Schiller PE, that does not jive. And here, by the way, here's your options expiration calendar. There you go. Remember, this is quarterly. This is why it's the quad witching. Well, it's technically back to triple witching, but we'll just go with quad witching still because it's the quarter one, which is March. Remember, June, September, and December. So this is a biggie. All right. In terms of earnings, really not much. I'm paying attention to General Mills to see if their profit margins are getting squeezed a little because of all their products and all the how big a company it is. And paying very close attention to FedEx Thursday afternoon. Will these things be market moving? No. FedEx could potentially, if there's pour fuel on the fire, if they guide lower into the holiday season. So I'm paying close attention to that. That's some of their guidance going into the holiday season. All right. By the way, here's Apple. This double with this gap down today, that's double, which little mini double bottom, which we talked about last week, which never confirmed or triggered, will be off the table with this gap down. But remember, Apple has a massive double top, which could easily take it back to the 200 week. So overall, that's what I'm paying attention to. In the short term, even if you don't trade Apple, if it starts closing below 209.85, that can definitely be a front run pattern to the double. And look where the double triggers on the daily. It's right at the 200. So if it loses the 200, triggers the weekly double, this could also spell some pretty bad news for the market. That's why I actually was looking at that this morning. Now, in terms of, let's just get something else out of the way. This was volatile, but did not invalidate the weekly double. This could still climb. This could still climb as long as on the continuous contract, and I'll go over the D's contract in NinjaTrader. And I just like to cover the continuous one here. But you could do your own analysis based off your trading a contract. If this, though, on the continuous one passes 5,871.50, the double is off the table because it's rallied too far. But could it rally even set new highs this week after, the Fed rate cut and then still come back down and trigger a massive topping pattern? Yeah. Has that happened yet? No. So I am prepared for volatility, but don't let these 2 weeks, and these are massive weeks, back and forth. The volatility is coming in to this is huge. And also this is waning momentum. It's still rounding out. Even if it pushes up, that will be a massive divergence on a weekly basis. And potentially we're rounding out on a monthly basis with This last little RSI on the monthly basis with monthly cycles getting to the top and looking to roll over is setting up for a massive monthly divergence. May never triggers why I'm still minorly bullish. Remember, we've not closed below the weekly rotation zone. Good morning, Richard. Good morning, Mark. So, I'm prepared for volatility a lot this week, a lot. We even tomorrow, even though it's one day ahead of the FOMC, we got retail sales. So, in the short term, we went back up on this little from the highs at the beginning of September to this pullback low from Friday. Remember, we closed above the 62.5 and then we took out the 87.5 instantly. So from that little perspective, it's done. We're back against the 87.5, which was already hit before. If we start breaking above about 56, 57, which is my first minor target area on any rallies, then I'm watching for the little highs, to at least test the high area. And this is where, if for short-term stuff, I would use these little reverse harmonics. So I'd be looking about 50, see, it comes in at 5703. So I'd be looking 5700 to 5703, and then if it eked out a little new high, 5737. Above there, you still have the prior big reverse harmonics to 5796. So those are the upside levels. Okay. On any pullback, we have pretty significant support about 5580. 5580. The only thing that starts doing technical damage in the short term is if we start closing below 5521. All right, and we'll have to adjust this again if we come back down, but here's what I will be looking then as we eke out new highs. And this is fascinating because, you know, this 50% harmonic level from retracements from the highs now on the 3rd back to the lows on the 5th of August, when it spiked down, all right, that's right at that 50%. So this is key. We start losing that and then follow through with a close. Now, this is the bigger technical damage. At this point, below about 53.25. Then, watch out. Other than that, in the short term, it's this 55.30, which is a 50 EMA. Hope that makes sense. Who doesn't hate Taylor Swift? Well, the Swifties don't hate Taylor Swift. So, I mean, it's just childish behavior. Jeez, man. Hold on 1 second. Excuse me. Sorry about that. NASDAQ, remember? We have this, still we have a potential head and shoulders with a horizontal neckline on the table. Now, if we start taking out the peak of this shoulder, it's off. But NASDAQ's weakening and weakening. Look how far below the July highs it got the August highs, and we haven't even got back to the August highs yet. And now you have stuff with NVIDIA and Apple. So, NASDAQ, you can see here that shoulder, head, shoulder pattern here. Front running area right now is by last week's low. And then following through with a close about below 18K. In the short term, if we break higher going into anything before the FOMC meeting, the target for me is 19,815 area, 19,814. Support, especially for today, is about 19,265. So that's what I'm looking at right now. And then the major support's going to get about 18,960. The Dow, this is interesting. We got to take a look here. Should do it on this side. Does this qualify for a potential double? Yeah, it does. It's right there. or I'd have to look exactly. I go off the right-hand side. We just don't know if this is going to roll over yet. But this is a potential mini. So watch just from Wednesday's. Last Wednesday's low is very, very key. Other than that, the Dow can easily still eke out new highs, and I'd use the reverse harmonics from that same key low from last Wednesday. Going back, which day is it? Which day is it? 682 is back to the 29th of August. And if I could click correctly. So look at this. We have, if it breaks higher, I have an intermediate target, which could be raising a stop at 41,888. Then I have a major cluster just above 42,000, 42,063 to 42,094, which would be a significant target area if it breaks to new highs. Russell closed above the little 62.5, so a continued run higher in the Russell, and you can see the candle body top area right here, 2225. 2225 is the target. Very key support. I'm raising my level a bit here to very key supports now coming in at 2150, 2151. The VIX, slight little bump up today. You might see the VIX, even if the market rallies, you might see the VIX climb just going into the FOMC because of any hedging, and we're going to see volatility. So the VIX can climb even without a sell-off. The DAX, in the little mini term, I'm seeing if it can get back above 18,829 to get a stronger potential topping pattern in here. All right, that's what I'm going to keep an eye on with the DAX. You can see that's a 75% harmonic. The DAX between Thursday and Friday did not close above the 62.5. So the first thing, 18,726 on a closing basis. If it can't close above there, then I'm not focused on that 75 harmonic. The yield, you still have, this is getting sloppier. Still technically, it needs a close above 3.7, but also remember the trend is still down. The trend is still down. And as we pointed out, it has triggered. What did I miss? Hold on, I got to think about this again. Yeah, we talked about this with the sloppy double, but it's the lower probability one because that's what threw me off. It's on the lower probability ones because of this hitch in there. But I really be focused on this 3.3 target. 10-2s continue to moving on up. Remember, we're talking about this as soon as even a couple years ago when Bob was on here. You start watching this, pay attention when the steepening gets above 20 basis points. We're closing in on there very rapidly. The potential double, which never triggered or confirmed, turned into a triple, which slightly favors dollar weakening. It's against very key support. But if you drop through these levels, if you start dropping through 100, 99.75 and then 99.41 are my two major targets. Crude, we're coming into the rotation zone. So I'll be watching for a little. We're getting to cycle tops, so I'm going to be watching for a rollover play, and then possibly trend is still down. But I'm watching against this very key support for potentially a stronger bottoming pattern setup. We just don't have it yet. Not surprised to see a little rally with cycles getting out of very oversold conditions, coming back into this very strong resistance area. Natty gas triggering the double last week and just pulling back to the breakout area. Nothing's really to talk about there. Gold, after its monster day 2 days last week. Just a little pause. If it continues to rally, which we might see a little breather, the pullback, you have a gap. Even with a bigger pullback, you have a gap left behind to Thursday to Friday's close to open. So the key support would be 2580. The minor support is 2600 at this point. The next target is 2641. Silver, which finally, after catching couple times on that first target, invalidated the rest of the double yesterday. So now the next key target area, and also closing above 62.5, so the magnet price is 31.97. Then we got the recent highs around 32.78, and then about 33.50, then 34.06. Copper is not a super strong pattern, but I'm watching it's flagging still up, and the target in the short term is 433. The yen continues to strengthen. At least, I mean, it's weakened a little since before, but it hit off a very key harmonic area with cycles getting to the bottom. So we could potentially see a little bounce, but we've got some waning momentum down here too against some pretty key support. So I'm going to start watching for a bounce setup, but is there anything fantastic? No, there we might be setting up for something like a %B buy bounce, a very short-term one. Bitcoin and Ethereum, not much to talk about. Ethereum keeps stalling at this first target. I saw we wanted, let's get to Tesla. Tesla's really key thing. You're going to have the quarterly delivery numbers coming up going into early October. Other than that, your level is this 238 level. If it closes above there, there's still the gap left behind. And you still have that potential magnet to 87. Personally, I'd use the gap in the 75 before that because that would be the magnet price, but it has not been able to close above here yet. And there's just been very strange buying pressure in here again. But as long as early warning sign for me is if it starts breaking below this trend line. Other than that, and then if it follows through and loses the 200, it's probably got this. It's at least a decent top put in place. Not even going to respond to you, Coco. What else? So we had the little mini double, which played out. We also followed through the close of the 62.5, and the 75s taken out on Friday. On the continued push up, let me pull off this. The continued push up today would be the little mini gap fill to Friday's close, and then the minor levels. I'd be looking at if it breaks above 564.20, 565.16, 567.30, 570.39. The bigger pullback, you still have a gap left behind between last Thursday and Friday. So on a slightly bigger pullback, 559.09, so the 559 area. 87.5, 480.87 is the magnet price with the close above the 62.5. Now we're gapping down this morning, so the first target on any rally would be 475.34. You don't have a downside gap, but my major support is 466.65. NVIDIA, you still have, now if this pushes back up and NVIDIA takes out this 131 area, it's then in multi-top area and the potential doubles off the table. But last week's rally did not wipe out the potential double. So just remember that. I'd watch Apple and NVIDIA as the two key things this week. Apple is down. Well, Apple's one mega cap But there's still, you're getting still a lot, support's broadening out. If you watch the last, when I was on with Bob and Jim, we talked about things like the RSP, which is the equal weight. And you see how it came down the week before, rotation zone, last week rotated up. The broad market, the broad S&P is starting to hold up a little more. So it's not just the mega caps doing the lifting, it's now the broad market. But one thing I did not talk about is this is getting into a major topping area, a major potential topping area. So keeping an eye on that. All right. What else? That's about it. Let's just take a look at the S&P going into the open, down a little bit. But again, if you're looking at this is why the heat map, let me get back up this too. The heat map, you have some chips and Apple down, but you look at the defensive and everything else. Look at the broad market. See, yeah, Apple might be down, but look at it's putting a little pressure on because of its cap size. But look at the rest of the market. You have healthcare green. You have banks green. You have oil and energy green. You have consumer defensive. Every basic materials. You know, this is starting to get a rotation into a broader market. Now, we've been seeing this a little more that the mega caps have been losing their lead a little, and we saw it. They've. What was interesting is last week, the mega caps triggered. It was a rotation in the mega caps, and then the mega caps stalled out, and then the broad market picked up to carry on the rally. So the rally is broadening out. However, with the rally broadening out, with the market cap weighted S&P, it's like trying to push a rock up a hill. That's why it's only minorly bullish, except for Coco, who's only got one thing ever to say. Let's just see where we open. So it'll bounce on the open. Let's see where the tick is. The tick, so you had a halfway decent tick opening with the broad market. So now I'm going to be watching for the rally to pause at some point and then see how much the tick pulls back see how much the market pulls back. Because you have pretty key support. You know, right coming in at 56.27 and then 56.24. See, we're already starting to get the pullback with the tick. So I'd be watching based off this 56.24 area. Now, on any rally, I'm not counting on any kind of trend day. Could get one tomorrow morning with retail sales. However, 56.37 and then about to 56.40 is very key resistance on any rally. All right. That's where we sit. Hope everyone has a wonderful trading day. Again, I'll be on Ninja Trader in about an hour. So if you'd like to tune into that, please do. And I'll talk to everyone later. Bye for now.